Hello, I'm Kate Gardens, and this is our weekly market update for Friday, November 9, 2012. Yes, I know today is only November 6th. But Patty and Mike will be out of town on Friday, visiting Patty's mum. So those slave drivers wanted me to post this week's update early, so they could approve it. This week we will look at current apartment financing trends, in the Puget Sound region. The average interest rate, investors secured, on financing 5-unit and larger apartment acquisitions, so far this year, is 4.3%. That's a mixture of variable rates, fixed rates, assumptions, seller financing, and a combination of short and long terms. And rates have been trending lower almost every quarter. They averaged 4.6% in the fourth quarter of last year. They are now down to 3.8%. These are some of the findings from our apartment investment report, which tracks all 5-unit and larger sales in King, Pierce, and Snohomish counties. We update the report weekly, with income and expense information about each sale, as well as all of the financing details we can get. Generally, rates have been trending lower for the past 30 years. Although there were a few spikes along the way, the chart shows a clear trend. Mortgage rates for apartment investors, in the early 1980s, were around 11%. Rates dropped to 8% by the early 1990s, and stayed there for the rest of that decade. Rates started their next big move downward, beginning in the third quarter of 2000. For the past few years, quite a few actually, Patty and Mike thought rates could not get any lower. They've been consistently wrong. It is often said, it is good to be consistent, but I am not so sure. At this point, Patty and Mike appear willing to put their feet in their mouths one more time, by saying that this is the golden age for apartment investors, a time they will either look back on fondly or with regrets. Although the average rate this year is 4.3%, just over one-half of loans carry interest rates of 4% or less. And one quarter were below 3.75%. At the other extreme, all of the loans with rates at or above 5%, were either seller financing, or assumptions, with the exception of one new loan. Not all investors try to maximize the loan amount when they get financing. So, as the chart shows, about 1 out of 4 borrowers financed less than 2/3 of the value of their property. Most borrowers managed to finance somewhere between 65 and 80% of the property's value. Okay, some of you are anxious to find out how a few investors got loans for more than 80% of value. Who would you call for that? All of these loans were seller financing. And remember what we said earlier about seller financing? Those loans had the highest interest rates. It seems to be a variation of the old joke, which went like this: I will pay any price you want, if you let me set the terms. In this case, the sellers did not require a large down payment, but in return, they got an above-market interest rate. The article that we posted with this video has information about some of the lenders active in this market this year. The article also has some comments on financing trends that should be useful to investors. Look for the article on our website, called Apartment Financing. We think you will find it worthwhile. Well, that's all I have for today. Patty, Mike and I hope you enjoyed this video. Please check back on Friday, November 16th, for a new apartment market update. Goodbye.